Hello, this is the Tradesight U.S. Stocks, Futures, and Forex Market Preview and International and Economic Data Roadmap for the week beginning Sunday the 6th of December 2020, ending Friday the 11th. So let's first talk about the markets, then we'll map out what's coming up in the last few weeks of the year. I can't believe it's December already, but it is. So here's a look at we'll start with the dollar index making new lows. Pushed down a little bit this week. We had some good trades in Forex, and that's fine. But it's not exactly super exciting like it can be. You can see that. Let's take a broader look at this and look at the weekly chart. And when you look at the weekly, see, we're starting to slip here. But, we've had some flat year and a half, 2 years. And if we go to monthly, this is, let's see if we break that 88 level. That might get more interesting. It's hard to say what that'll lead to, but it has not been the most exciting in Forex the last 6 months, because you can see how flat that was, or 5 months. Let's look at the euro dollar index. So obviously the inverse of the dollar itself breaks out. Okay, fine. The pound dollar it swept the highs and didn't really do much. Aussie dollar very near the highs, and it is what it is. The euro yen very near the highs. Could be a breakout over 127. I would mark that on your sheet and go for that trade. Pound yen, look at that 13 sell signal back in August in the risk line. We've nailed it perfectly. Sold off, and it is what it is. The pound Swiss, nothing here. And then the New Zealand dollar pair, also nothing here. So it's kind of been whatever from that perspective. When we look at the intra-week action, 30-minute candles, let's just look at a couple of them that matter. The euro dollar high to low for the week is about 230 pips. Most of the action was Tuesday and Wednesday. If I look at the pound dollar, most of the action for the week, it was, again, 230 pips, so that's not that exciting. But it did move for us up and back on Tuesday, Wednesday, and then Thursday. And so it is what it is. It wasn't the most exciting week in Forex. I wouldn't say, other than the breakout in the pound yen, I wouldn't say there's much there to look at moving forward. So let's not focus too much on Forex at the moment. All right, let's talk about everything else. The futures. Here's the ES front month futures contract. This is the daily chart of the broad market in futures form. Again, new closing highs on the broad market on the session on Friday and Thursday. Let's go through the daily charts, then we'll look at the intra-week action. So we've got crude oil up 45 cents to 46.09. Gold up 90 cents to 18.42. The S&P cash gains 32.40. The NASDAQ 100 up 61.35. New closing high there. The SOX up 76 point. That's a big one for the SOX. New closing high there. The biotech's up 46.2. New closing high there. So we've got new closing highs in all the key sectors. Everything looks good for the market. Now, the put-call ratio will be your issue in a minute. And also, Rich had pointed out the bull-bear stuff is not great. But here's the Russell 2000. This one's up 45. This is a big move for the Russell. This is a good sign. Like, this is what it looks like for the future, right? Is the small caps are finally starting to recover. I mean, remember, if I go to a monthly chart of the small caps, Russell 2000, right, it really has only been this last short period of time that this thing finally started to take off, whereas everything else had been. So that's a good sign overall for the broader economy, because the small caps felt like they were being left behind. The VIX closes at 20.79. which is fine, and it takes us back down under the red static trend line, so that's fine. Trend closes at 0.79. That puts the 10-day moving average at 1.02, which is not a sell signal or a buy signal. It's nothing for us either way, so we just move on from that one. It doesn't really matter to us. NASDAQ volume was 5 billion shares. It's been up, obviously, significantly for several days in a row here recently, and it looks good. But it hasn't led to a lot of movement. It's just kind of the market going up a little bit, but it is what it is. Advanced decline ratio on the NASDAQ plus 1721, so more stocks up than down. Better than we've seen for a few weeks, but not the best, anywhere near the best of the year. On the New York plus 1761, same story there. Google gains $1.92. That's new. Close to new closing highs there. Apple down 69 cents, and this one's not near closing highs. Netflix up 79 cents. Nice sideways base action here now for 5 months on Netflix. Amazon down 24.15, kind of the same thing. Breakout here eventually would be great. We'll see if it happens. Tesla up 5.66. Facebook down 2.15. Zoom down 3 points. Goldman Sachs, another one we like to watch, up 4.11. Now, I will say, there's a couple things. So one of the big things I watched this week was the Salesforce check on the buy of Slack. So let's take a look at what that means. So here's the Salesforce chart, and you can see that it did not take the news positively. Now, there was a 13 sell signal in place perfectly at the beginning of October, and the stock's never been above that signal. But it is what it is from that perspective. And then if you look at Slack itself, which is simple work, and Slack's a great app if you never use it. Boom. Nice launch there from that perspective. TLT, the 20-year bond ETF, down $2.31. Doesn't really matter. The Dow was up 248 points. And then again, it's this put-call ratio that's so low over and over and over again. It's been so low, which usually means the market's going to head lower. We don't have the trend reading to match it. But overall, I would just say, look out, this could be, at some point in time, fairly ugly. All right, we'll go look at the week in 10-minute candles on the ES, and what you'll see is what? Monday, remember, the prior Friday was the half day coming off of Thanksgiving, so that's the very left side of the chart. And then Monday, we gapped down a little bit, went lower. About an hour in, that's the low of the week. Then we curl up, didn't make it back to the opening level. Tuesday, we gap up. Tried to push higher. We got a 13 sell signal in the afternoon, came back down off of that. Gap down Wednesday morning and drifted back up to fill the gap. Still didn't even take out the highs of Tuesday. Flat on Thursday in terms of the open. Did sweep the highs of Tuesday after that, but then came back. A little bit of wiggle late in the day on some news from Pfizer. And then Friday, gap up and push higher. So we did net gain for the week, but it was kind of in an awkward fashion. Here's the NASDAQ side. Look how flat, by the way. Thursday and Friday are so flat. Ugh, that's just horrible from a trading perspective. All right, in terms of the week ahead, there's a lot of data obviously coming out, and let's take a look at it. Sorry. Sunday, the AIG Services Index at 4:30 p.m. These are all Eastern time, so I won't say that again. Trade balance out of China. We've got leading indicators out of Japan going into Monday. German industrial production. Foreign currency reserves out of Switzerland, Halifax HPI out of the UK, Centex investor confidence out of Europe at 4:30 a.m., IV PMI out of Canada, consumer credit jumping to 3 in the afternoon here in the U.S. We've got average cash earnings and household spending out of Japan, then bank lending current account, final GDP out of Japan, BRC retail sales monitor out of the UK, housing price index out of Australia. Takes us into Tuesday. We got economy watcher sentiment, French final private payrolls, the unemployment rate out of Switzerland, Italian bank holiday. We got French trade balance, final employment change, revised GDP, zoo economic sentiment, and German zoo economic sentiment. NFIB small business index at 6 a.m. Eastern time here in the U.S. On Tuesday, 30-year bond auction out of the UK, revised unit labor costs here in the U.S., manufacturing sales out of New Zealand, Westpac consumer sentiment out of Australia that night, core machinery orders and M2 money stock out of Japan, CPI, PPI out of China. Okay, preliminary machine tool orders out of Japan, German trade balance out of Europe. We've got a rate announcement out of the Bank of Canada at 10 a.m. Eastern time on Wednesday, along with the U.S. Final wholesale inventories and JOLTS job openings. 30 minutes later, our crude oil inventories, 10-year bond auction here at 1, BSI manufacturing index and PPI out of Japan that evening, MI inflation expectations out of Australia, RICS house price balance out of the UK, RBA bulletin out of Australia. We got construction output and GDP and goods trade balance index of services, industrial production and manufacturing production all out of the UK at 2 a.m. Eastern time on Thursday. French industrial production. We got a rate announcement out of the ECB, that's European Central Bank. We've got then their press conference. CPI, that's one of our big three each month. So we'll be half size ahead of that on Thursday here in the U.S., along with our initial and continuing jobless claims numbers. 10:30 a.m. we've got natty gas, 30-year bond auction at 1 p.m., federal budget balance. So just note down the things here that you care about. We got the business manufacturing index out of New Zealand along with their FPI. And now we're into Friday. German final CPI. We got the Bank of England financial stability report and some statement and minutes from that meeting. We got the French final CPI, Italian industrial production, UK consumer inflation, Italian quarterly unemployment rate, capacity utilization rate, here in the U.S. and Canada, sorry, PPI in the U.S., CB leading index, and then the University of Michigan sentiment here in the U.S. So there's some data. Now let's talk about the calendar for just a minute, so everybody's on the same page. So we already had our first Friday of December, so this next week is a free open week. There's no options expiration. I just went through all the economic data that's coming out, and that's that. When we get to the following week, we will have triple expiration, and it's also year end. So that usually has some financial impact on the market, right? Everybody's got these positions. They've had some of them for the year, some of them for the quarter, and they are going to wrap up on Friday the 18th. So there's usually an options unraveling move on the 16th, Wednesday, or maybe 17th, Thursday. We'll see how that goes. So while that's still a free open week, no holidays, it's still going to be interesting to see what that leads to. There should be some action there. So hopefully next week we have good action at some point in time. It hasn't been that exciting in the last 2 weeks, but we have had solid winners. I mean, it's just not enough. I'd like to see more trades. Can't get them when the market's not moving. And then on the third week, then that's your triple expiration week with everything expiring and it's not just triple, it's end of year. And there's a lot of money that's going to be packed into that. The week after that then is Christmas. So we've got Monday and Tuesday and Wednesday are normal days. Thursday for Christmas Eve will be a half day, and Friday is Christmas Day. The markets are closed. But let's be honest, it's kind of like Thanksgiving in reverse, right? Wednesday people will start to take off. So Monday, Tuesday might be okay. Wednesday's Thursday's a half day nobody cares about. Friday the markets are closed. Saturday, Sunday the markets are obviously closed. And then the week after that, you're back to the same thing. I actually love this layout. We don't get this that often, obviously, because it's only once every 5 years or whatever. But we're going to have the following week, because remember, the last day of the year has to be a full trading day. That's the stock market rules. So New Year's Eve on December 31st is a Thursday. It's a full trading day, even though nobody will be around. Nobody cares. Nobody's going to trade it. And Friday we're closed. And then we have Saturday, Sunday, and then we start the year. We start everything. So people will get right to it. All the tax ramifications will be over, and we will just get to work on that 4th. So I think the next 2 weeks have good opportunities. We know everything slows down in that week between Christmas and New Year's. It might stop around Wednesday the 23rd. But that still leaves us some time between here and there to make some money. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.